Morning, everyone. I suppose all of you can hear me. The guests can hear me. So if you can't hear me, just raise a hand in the participant section, and then we can have a conversation about that. So good morning from Nairobi. It's a pretty cold day out here, but thank God it's Friday. Usual. Welcome to the Yale Bridges webinar on this day of 21st of August 2020. My name is Sefa Zakoth. I'm your usual host, the founder and Africa. We call ourselves the voice of Africa cybersecurity, and we do cybersecurity media to take Africa cybersecurity to the forefront of the continent and the global scenes. We do this through media, we do special industry programs, and we also get involved in events. In this webinar today, we'll consider and discuss vendor risk management and assessment, stock frameworks, stock practices, regulations. And in the room, we have a vendor, we have a regulator, and we have a consultant, and as well we have a consumer. So it's going to be a presentation. Our guest experts are going to introduce themselves in a little while. In the meantime, you guys can connect with us. And this is the part I ask Lisa to kindly share contact information and other information for you guys to connect with us. I've posted some links there. Please connect with us. Look at the sites. Follow us on Twitter, on LinkedIn, and any other places. We definitely always keen to further this conversation beyond this webinar. A bit of housekeeping as usual. Please ask some questions and seek clarifications in the chat section. Feel free to share any information or any links to knowledge resources as pertains to the topic of today, again, in the chat section. Love to have you guys participate. Please participate. Please ask questions. Please comment. Please ask for clarification on certain points. And checking out the chat section and addressing those to the panelists. In case there are any technical hitches in the course of this webinar, we ask that stick around with us, be patient. They always happen, so we'll be working to sort them out. Before we get into today's agenda, in our webinar last week, we talked about security awareness, covering culture, covering leadership, and the how-tos of ensuring enterprise security awareness. If you want to catch the conversation, you can check the Yale Bridges YouTube channel for the recording on demand. And Lisa will also be kind enough to share the link to the YouTube recording. Also there, leave your comment, put a like, share, can help someone out there. Okay, I guess I've jumped one thing. Welcome our panelists. Welcome our attendees. For those who are new to the Yale Bridges webinars, I was told that there are some participants today, a lot of them. So welcome guys from the circle, welcome guys from every other place here. Hope you're going to enjoy this conversation. Okay. So getting into today's talk, I'll ask our guests to introduce themselves, and I will begin with the lady in the panel today. Sorry, Steve. Samari.
Thank you so much. Thank you for having me. Like you said, Samari Kakibale is my name. I am an information security specialist. I have a wealth of experience working with local and international institutions, majorly in the banking sector and some government sectors. And during my period, I have helped identify gaps and provide ways to improve ICT security landscapes of the various institutions I have been to. I didn't start out like this. I started out as a systems analyst, and I quickly picked interest in information security and assurance. And well, I realigned my career in that line. Currently, I work with the Central Bank of Uganda as the senior IT auditor. Professional-wise, I also serve my profession as the IT governance director at ISTACA Kampala chapter. In the same chapter, I serve as the She Leads Tech liaison for Kampala. I am a mother of two children, a boy and girl. age 6 and 4 respectively. I am a CSAR and I have a bachelor's degree in information technology, and I'm working towards getting many, many more. Thank you for having me. I look forward to this very, very exciting session. Thank you. Back to you, Robert.
Thank you. Yeah. Thank you, Samari. Robert?
Yes. Good morning. Good morning, everyone. My name is Robert. My second name is Karaoke. My father's name is Mogoi. I'm currently the IT manager, Chai Sako. I see a lot of my colleagues here in today. I'm here to represent my people from the Sako fraternity. Robert is an IT enthusiast from way back. But I did electrical and electronics engineering from the University of Nairobi some times back. I got into IT just because I loved IT. And here I am. I'm a father of 3 teenagers now. And this is my 17th, I think, year working in the IT industry. Started out with an internet service provider, went into NGOs in Africa, in war zones especially. Worked for UN, now working for, I've worked for an insurance company, now working for a SACCO. I'm very, very, very enthusiastic about issues, risk, and anything IT that we can all sit and learn today. Karibu sana.
And karibu sana, Robert. Yes, you're the big brother here. Michael? Michael, you're on mute.
Morning. It's a chilly morning today, and my name is Michael Owino. I'm currently the head of channels in Cortec Systems and Solutions Limited, and at Cortec we provide core banking solutions, mobile banking, agency banking, ATM, online banking, to SACCOs and microfinance institutions. So basically, we are a fintech operating in Kenya. We also extend our operations in countries like Botswana. In Botswana, we've taken all the cooperatives in Botswana under the Ministry of Cooperatives. So we supply them with the software as a service core banking system. That is core banking system on cloud, but hosted in Botswana. We provide them also with a mobile banking solution. We provide them with agency banking solution. We do all manner of integrations to the telecos, and we span across the entire Botswana. We are also in Swaziland. So in Swaziland, we also do the same, but not under the ministry. In Swaziland, we just approach sample circles there of interest. We are also in South Africa. South Africa, I think we are about to go live in South Africa. I think maybe in the course of the month, either early next month. I think so. So at the same time, we are also having a footprint in Nigeria. Nigeria, we are having the farmer-based cooperatives, which we are offering them our solutions. So in this particular discussion, I'm happy to be here. I'm happy to be a panelist in this particular discussion, being the person of interest, because for this case, I am the vendor. I am the vendor, and it's a very nice discussion to be in. Thank you, Cephas.
Yeah, sure. And just get ready for all the shots fired at you. You know,
Very nice, very nice.
I'll also be running by you. You know, run with you around something later on. Anyway, Steve, and then we can proceed.
Hello?
Steve, sorry, we
Steve?
can't hear you.
All right. So Steve is our host, and he's the chief operating
Hello?
officer. Yeah, there you go. You can hear you
You
now.
can hear me? Ah, very
Yes.
good.
No, we can't hear you again. Okay. Doesn't look good. Right. So, Steve, I guess
Okay,
we'll allow you to.
I'll just reintroduce Steve on, I'll just do the introduction on his behalf.
Okay. All right. That's fine.
Is that okay, Cephas?
Yes, that's
Okay.
okay. Please.
So, Steve Mambo is the COO of Yale Bridges. So he'll currently be the host of this session, as well as take part within the session as a panelist. So yeah, hopefully by the time we'll start off, he will have sorted out whatever issues with his mic. Yeah, so Cephas, we can proceed onwards.
Okay, fantastic. Nice to have you, gentlemen and lady, in this room. And let's get this thing started. So I will start with. I don't know who to start with, but this goes to all of you guys. Can you demystify for us vendor risk management from your own experience? Let me start with the regulator.
Oh, thank you. Thank you so much. Well, business is not done in silos, as we all know, but in partnerships, and vendors are naturally part of that whole ecosystem. Businesses continue to find ways to outsource their non-core functions so that they can focus and put all their energies on their core business. So what this does, it introduces a level of dependency on the vendor and also exposes the company, that is the company that is bringing on the vendor, it exposes its information and processes. So, so far from what you would have anticipated as the host, as the company bring in this vendor, what started off as a simple come in and get the job done and go back, it turns out to be a crucial element of your business success. You know, so this exposure makes the vendor more of an insider. And if some of the risk materializes at the vendor level, depending on the nature of the relationship, this definitely cascades the effects of this breach and the breach that happens or the risk that materializes cascades to the company, and it can pose a number of threats to the company. So what is vendor management basically? Vendor management is a holistic approach that companies take in order to gain oversight on its relationship with its vendors from before you sign a contract with a vendor to the time you sign the contract to the time the vendor delivers your goods and services, and also when your relationship with the vendor ends, because sometimes we forget and think that, oh, once we are done with these guys, it's over. But no, I have seen an instance where a relationship with the vendor ended, and because the company was changing system, it needed some data from the previous vendor, and the vendor refused to hand it over because of the way the contract was signed. So you can imagine it, all that work and time that was invested redoing the whole process, yet this guy could have simply handed over the data, but they refused. So also we have to plan the exit or transition of vendors. So vendor risk management is a component of the entire vendor management process. So vendors and third parties, they pose many risks. They can be financial, operational, continuity, reputational, compliance, legal, data security. So it is imperative that we take approaches, intentional approaches, to make sure we manage vendor-related risks before we enter relationship with vendors. So on my side, that is what vendor risk management is all about. Thank you.
Interesting, and you've highlighted some things that you're going to talk about, risks that vendor poses. Then you mentioned something with third parties as well. I guess we'll have a bit of conversation around the vendor life cycle. But let me come to Robert. What do you think vendor risk management is? Risk management, we talk a lot about it, but how does the vendor come in?
Thank you, Cephas. Vendor risk management is, simply put, the process of ensuring that the vendors you use, to provide you systems, equipment, and other services, don't expose you to the challenges of, data laws, challenges of reputation laws, the risks that come with being exposed. I look at vendors as necessary evils. You cannot do without vendors unless you are trying to cheat yourself that you can be everything. Because look, if you are in the business like I am of giving people loans in circles, I don't have time to go make a system. I don't have time to go doing any other things that are not core to my work, which is to give people loans. So these are the things that enable that convenience of giving members loans, then has got to be done by somebody, and that somebody is a vendor. And I want to demystify today that a vendor is not just that person who is giving you the system. It's even the person using the system, including your own staff. Actually, interestingly, when I was looking at it, how can I, list down who are my vendors? I was told, go to your, account payables. Who do you find in your account payables? People, everybody, including myself, So that is all I can say now.
Interesting. So look at your account payables, and you have a list of all these companies, all these individuals who offer service, some sort of service to your organization. Interesting, Michael. And you remember we're talking about you.
Yes, Cephas. So let me demystify myself in this risk management.
Please do.
As the vendor. So now, okay, let's look at it this way. Yeah? First of all, let us look at what is the vendor risk management in terms of demystifying it. So this purely the process of ensuring that the use of service providers and IT suppliers does not create an unacceptable potential risk for business disruption or a negative impact on business performance. Now, I think it is also important to understand that, who or what a vendor is in the context of business project and goals. So vendors and third parties to organizations can provide a small or a one-time need for a single project. Like you find that, or can be maybe an ongoing business partner. So in this case, like you can have a vendor who takes only one component of your business two components of your business or all components of your business. For the case of like what I was trying to allude to earlier on, Kotek offering the banking solutions. So you can have a vendor who provides core banking. You can have a different vendor who provides you the mobile banking solution. You can have another vendor who provides you maybe with a payroll system. You see, so these are different vendors. So in demystifying this risk, we have to look at these in totality, not only with one person in mind. But at the end of the day, also you can have one vendor who takes it all. So common vendor scenarios might also include like a seller in the supply chain of a piece of equipment a company needs. For example, a company maybe that makes electrical outlets and sells them to a car manufacturer. You see, because you take like an example of a vehicle is that a vehicle, the body is done by a different manufacturer or a different vendor. The electrical system is done by a different manufacturer. You see, so different components. The tires are manufactured by a different manufacturer. So now here, when the whole vehicle comes out as a unit and goes on the road, if the vehicle maybe develops any complications or poses a potential risk of maybe crashing or things like that, it will be looked at what caused the crash. Is it the tires? Is it the steering? You don't look at other mechanical issues that might have been brought by that kind of a scenario. So in that particular case, you get to understand which vendor brought the item that malfunctioned. Then another scenario to be looked at is that you can look at an individual who sells his or her services to a company for a one-time or an ongoing need. For example, a landscaper hired to do ground cleanup for a company, let's say on a one-time basis or for a fixed amount of money or for a fixed amount of time. And this also could lead to an ongoing vendor relationship. You see, like for example, you get a landscaper or a gardener who comes to do your grass so nicely, your flowers nicely in your organization. You see, so that's also another element of a vendor. So let's not just look at the IT aspect of it. This vendor management encompasses very great dynamic angle and very many people involved here. And all of them can pose a potential risk because the risks known to an organization, mostly to IT or to financial institution, is normally a cyber attack or a cyber risk. That's what people normally come to think about. But in this case, you find that even that landscaper or even that gardener can even be a security potential or a risk potential to come and even attack your organization. Because if I realize that a gardener normally comes to your organization to do the landscaping and all that, then I can give him maybe even a flash disk to come with it in your, to come to the receptionist to plug it in there, or a phone to plug it in there. And that becomes like a backdoor in this particular case. So let's look at vendors in totality. Then another scenario is that anyone who provides a goods or services to an organization. So these can be companies or people who provide supplies, services, consulting, and any other goods once or on a long-term period. So that's why vendor management is a company's oversight of the relationships with the vendors, from acquiring them through the delivery of the required goods and services onto the final evaluation. So there has to be a process, there has to be a channel that the organization follows in terms of onboarding and acquiring these particular vendors. So the person in an organization who oversees these relationships is called a vendor manager. It can be assigned to another particular person, maybe even to the risk department or to the audit department for that matter. So, and this person can reside in any segment of the business, from human resources to supply chain, wherever the organization will see fit. So however, other stakeholders or employees in the organization may manage the relationship more directly on a day-to-day basis, because they have to be the person who interacts with these vendors. For the case like Robert, you see like Robert is the one that that interacts with the vendors directly. Others, the HR doesn't interact with the vendor directly. So you find that for the case of maybe Chaisako with Robert has been given that responsibility of addressing the vendor, interacting with the vendor, and if any other people in the department, from finance through to HR to other departments have issues, they channel them to Robert. Then Robert now interacts with the vendor. Then now the vendor gives an affirmation, and then the cycle continues. So this assignment can be given to anybody. So vendor risk management is an important component, and vendors and third parties also can pose many risks, including financial, reputational. Because here we only look at the financial risks, but we don't look at the reputational risk, because if your reputation goes wrong outside there, you see, it brings like a bad PR to your organization, and that can cause damages. You can even have compliance issues. If a vendor doesn't follow the proper compliance methodologies and sets you up with the regulator, you will face terrible compliance issues. So that's another angle of risk to look at. You can also face legal issues, because if in case of any breach of the customer data or anything that happens to the customer can sue you. So here we are looking at also legal issues and many more. There are many other risks that you're looking at here, not only focused on one. So therefore, it's always in a company's best interest to protect itself from vendor risks before entering into it or during that relationship, because I know that most people here, including our listeners, have got vendors already. So even during that process, and even after the vendor relationship ends, so even if maybe you terminate your services with the vendor, it is still key to know how to have that relationship still going, and to know what other potential risks can come out of that. Because you see, this is somebody who's providing for you services, you see. And in the aspect of termination of services, you also need to look at what other risks can be able to come out after this person has left my organization. Yes, so I think that's how I can demystify this particular subject. Over to you, Cephas.
Thank you, and thank you for giving such a comprehensive, explanation of vendor risk management. Samari and you have mentioned the aspect of risk when it comes to vendors, and I want us to delve into that a lot before we get into how you manage risk and all that stuff. Michael, you've given us some sort of profiling for vendors. We can have vendors across different aspects of the organization, from human to IT to etc. But back to you, Samari. You had mentioned risks in compliance, risk in operations, and all that stuff. Can you give us some practical examples of how these risks really come to life? And you can also expound maybe on the type of risks that you can look at from a client perspective. Samari, you're on mute.
Sorry. That's better, right?
Yeah, that's better.
So like my colleagues have mentioned, really, for all the benefits that we have to get from these vendors, for them taking away that headache of the non-core things that we do, there are some significant drawbacks if we don't manage these relationships in a certain way. They range from reputation to financial to operational, but to jump deep into some of these, some examples, a third party could damage your financial performance. And how can they do this? Sometimes we outsource a vendor to develop, for example, a core application for us, and they underdeliver on the project. And why? Because they were acting as a middleman. We have seen cases where you have a briefcase company here in Africa, in some countries in Africa, and they are brokers. They're just brokers for a certain company in India, in China. And when you find you process, you do the contract, they win the contract, and when it's time to bring resources on ground, they don't have them. They don't have them. Or there's COVID happened, and these people can't come from India to here, yet you told us that you have the skills, and you find that it's going to affect the way I do business, it's going to affect the way I serve my customers, and it's going to affect my returns. I will be able to fill this on my P&L, or I'll import in, I'll bring in a machine, a device, a server, and it will not be what I asked for. It will not be the quality that I asked for. I mean, I will not have benefited, I will not have gotten value for money. So it will definitely impact my financial targets. We have the reputational risk. As a result of vendors' weak control environments, so our own exposure, since the vendor is now exposed to our personal information, whatever they do, if they breach some of the information that we give them, if they share some of the confidential information that we give them, this could result in a reputational risk for us as the people who are bringing on this vendor. We could also look at regulatory risks or compliance risks. Some vendors evade taxes, and you know, when you are bringing these vendors on board, they may not give you their proper tax returns, and then you'll find along the way you're going to have to pay heavy penalty for that, or you're going to have to discontinue this service. You know, some vendors also bring in people on their teams who do not comply with the regulations of the service that they are bringing you. Let me take this away from IT. For example, you're a banker, you want to refurbish your building, and you ask a vendor to come in, and these guys all be from the construction industry, and their engineers are not certified by the engineering society. And no matter what you do, sooner or later, the government will come for you and will say, no, what you did is not up to standard. And you'll have, you know, all that will be wasted time, and you'll find yourself in lawsuits, in penalties, things like that. We also have operational risk. Operational risk is about lack of competency. I had mentioned this earlier, but this now is on a continuous basis. So you find you have a vendor who does not have the skill set that you need to continuously deliver the service they promise that they will deliver. And also on their side, they have a high staff turnover. So the staff keep changing, and as they change, it exposes your information, your company. The people that go, they go with your information, with your setup, because remember, when a vendor comes on board, in as much as they're dealing with a specific or isolated system in terms of IT, maybe they are dealing with internet banking, online banking, but internet banking and online banking work together with other systems. They're in an ecosystem. I'll need to see how the core banking is configured. I'll need to see how the mobile banking is configured for me to have the online and internet banking working so well. So all this information is exposed to me as a vendor, and this will pose also some risk. Then there's also a risk on continuity. This is all about the vendor's ability to run amidst of disruptions, and also run in line with my business continuity expectations, because I have my return time objectives, I have my return point objectives, and they could be different from the vendors. So that's another area we need to align to make sure that this risk is minimized. Another risk that I can that's what I can think of at the moment. Thanks. Back to you, Sifas.
As we bring Cephas on board, at least now my mic is back. I could just make a comment to what all the panelists have said. I think the biggest issue with vendors coming into an organization is that you're basically allowing a stranger into your bedroom, for lack of better words. This is a different organization that you've given access to your organization, and I'll probably want to address it more from an IT perspective, that you've allowed this external stranger to come into your organization to assist you with a number of services or solutions. And with that process, they also get to understand your processes. They also get to understand the people who are working within the organization. They also get to understand the rest of the technology that you've put in place. So it's a stranger who's been allowed to get into your house and get to understand how the structure of your house looks like. And with that, there's need for us to do vendor risk management so that we also put in controls from the sense of how much data do we allow this vendor to have? What kind of access does this vendor have on time in our systems? And more so, once the vendor is still providing this service for us, maybe for the next 6 months, 1 month, or a year, do we have checks and balances to ensure that the vendor is actually providing the service that they promised to deliver as part of their KPI? And as well, are they also meeting the SLA that we signed up with the vendor? And I'm sure we'll also go further into discussions in terms of termination of those contracts and what other factors do organizations need to consider when they're factoring termination of contract with vendors, and more so IT vendors. Back to you, Cephas. Cephas, are you there?
Oh, sorry guys, I was on mute, but it happens all the time. But yeah, so Robert and Steve, this is to you. And I'll start with Robert. You're the ICT manager in your organization, and Michael had mentioned that the component of managing risk for vendors probably lies under your docket. So I want you to give us some practical perspective or experiences of how you manage vendor risks. That Samari had mentioned, operational, regulatory. How do you navigate through all that? Then Steve, you can as well chime in and tell us some of the advice that you could give to organizations such as Robert.
Thank you, Cephas. Allow me just to add on to what Samari narrated in terms of the risks that we find by interacting with the vendors. I want to use a practical scenario. For example, you want to go out there and get a core banking system as a circle, as a bank, or as an organization. So this is where we encounter the following. What Samari called briefcase vendors is not only briefcase, but even corrupt vendors who, despite their product, despite their system being generally below bar in terms of performance, or simple. You need a system that is simple, can be able to integrate with another system. Despite that, you will find that some vendors have a way to get hold of the decision makers in organizations and get into winning a tender of whatever system was being procured. Part of what they do will be, exaggerate what they want to deliver, over promise that we will do, everything. So they wow you as the customer or the client, and when now it goes to the real work, you'll find actually they promised heaven, they gave you hell. Then you start having issues right from the implementation. They said they'll provide a V8. They have given you what is the smallest engine? A border. Then you start to from the word go, experiencing problems in implementation, experience problems in operation. Then when, for example, you realize we can't do this, you want to now say, can we get somebody else to come on board? They will tell you, yes, we can do it, but now at an extra cost. See, this has now brought in an escalation of cost that initially was budgeted for, and now you are getting to be spending more and more. I've already said they provide a poor system that has a lot of bugs, that needs a lot of tweaking, that is always down. You know, that erodes the clientele you are serving. Will be like, do these people know what really they are doing? How come their system is always down? They go to my competition or my brother in another circle who has got a better system. They're like, we don't experience the same there. Now, that system will even be further worse, that it is not secure. Security was not part of what was being thought about when it was being developed. And you know, left, right, every Friday evening, as an IT manager, you are not sleeping because at exactly 1 a.m. You are on the lookout, or else you are going to lose money. Okay, you wake up in the morning, all the float you had put is gone. Then they probably give you an old technology that is not upgradable. So when you are tired and, you know, fed up with it, you can't upgrade it. You will just have to throw it away and bring a new one. You can imagine that kind of scenario. Then some will go further and lock that system or encrypt that system to a point that if you part ways, nobody else can be able to support that system. Totally, it means it is useless if the very vendor who supplied it is not in the picture. Then my sister Samari said about compliance. A vendor will tell you they're accredited, we are Microsoft, we are whoever compliant, and this is like the licensing that you do, only to realize that that is you know, lip service. That license is nowhere. You don't have an account with Microsoft. You are basically under the mercy of that vendor. And when now the tires meet the road, you are on your own, and Microsoft will make you sweat like you can't believe it. And the other risk that we have is vendors will, they just refuse to be innovative. So sometimes it is what was the high turnover. You know, you can't maintain good developers, so you don't have people who are thinking, now what do customers need? What does the world need? Like now COVID and you know, think about innovation. Then what is the killer of it all? You can get a good system, you can have the best thing, but if the support and maintenance is bad, you have nothing. You have a shell. So you'll find vendors who have come in, they've given you a system, but they cannot support it. You know, it is a hit and run. You know, they've given you the system and they are gone. Then you have to sweat and, you know, sweat blood to get it to operate. Finally, termination. When you terminate, my friend, you wish you never even had anything to do with that vendor. They've got a beautiful way of locking you down to a point that you will be with them from A to Z. Without them, your organization crumples. Cephas?
Before you come in, Steve.
Sorry.
Yes.
Before I go, yes, I've just listed down the risks. Now, what can I do? What can we do to mitigate these risks? I think that was the question. You know, I talked about the risks until I forgot. The real question was, what do I do as Robert or as the IT manager, Chaisak? Number one, I have to build a good relationship with the organization I represent. At Chaisaco, I need to work with the board. You know, that board that will easily, if for lack of a good term, can be easily be corrupted by a vendor. So that when you raise an issue, it is taken into consideration. For example, if I've got a good relationship with the board, with the management, with staff, and I tell them, please allow us to do due diligence on this vendor, allow us to go benchmark with my colleagues in the other circles, give me time to do a research and find what is the best system we can go with. So if you have the goodwill of the board and management and the other staff, then you know when you give a suggestion, it will be taken into consideration. Number two, when you have brought the vendor on board, please take time and give proper thought requirements. And this, I want to advise my colleagues in IT that it's not an IT job for requirements of any system that is. You should ask, for example, what do, using now the scenarios I know, what do credit departments do? What do you want the system to do? Then you can be able to come, take time. You know, like the saying that goes, if you want to go to the forest and you want to cut a tree, don't just go and cut that tree. Take time to sharpen the axe, so that when you engage, when you commence, you will take a lesser time. So take your time, do due diligence, do requirements gathering, so that you have a document that you can now say, this is what we want, and please tell us, you know, the levels that you are able to deliver. Again, we should not look at the enemy here. It should be a partner. Make the vendors also take the responsibility of that system by engaging them in terms of, look, if this thing goes south, yes, me as a customer, I'm going to lose the money, but you are also going to lose what? Reputation, and also, you know, and you are not in the market to lose the reputation. Where will you work? So treat the vendors as partners and engage them, so that, you know, if they are also telling you, look, this is the only way we can do this, be flexible enough to understand. Finally, engage experts, like we have now in Kenya with the advent of a lot of cyber security issues. We've got organizations like your organization, the Yearbridge, whose work is, you know, security. Give these people work. Why are you denying the experts in the field work? Tell them, come and test our system. Can you ensure we are protected, and what, show us the gaps and assist us to address them. And this will now even get back to the vendor. Finally, it is all about goodwill from all share stakeholders. goodwill from even the customers you serve, because like I saw yesterday, Gmail was down. Can you imagine Gmail being down? Yeah, so let your customers know that from time to time we will have problems. Don't crucify us when the system is down, but we will try to mitigate. We will do everything we can that the effect is not unbearable.
And I think that
I've spoken enough.
And I think that one particularly goes to Michael. And before Steve, you jump in, I know I'd ask you to jump in. Let me just run something quick by Michael. You know, don't promise heaven and deliver purgatory or hell. Or you can respond. You can respond quickly to that one. But I also like you to talk about something quickly. The issue of vendor trust, and this came from Robert. You know, a reputation. You're promising this and that, and then you end up sort of destroying the relationship with the client. How do you as a vendor manage the issue of trust?
Michael, sorry, Cephas, just a minute before Michael addresses that question. I'd like to give an opportunity to Amos from Harambee Sacco just to give him his thought about what Robert was talking about, and then we can have Michael take up the question. Amos?
Hello, am I audible?
Yes, you are.
All right, thank you. In addition to what Robert has alluded, I wanted to mention some of the practical ways that we've implemented at Harambee Sacco. Some of the vendors that we're already engaging in terms of ICT, we tend to give them a set of questionnaires, like irreducible minimums, that when it comes to security. We call them minimum security baselines. So when we are engaging you, let's say on mobile or infrastructure, there are a couple of questions which we want to engage you specifically when it comes to security. What have you implemented on your end so that you don't come in and expose ourselves? The other aspect when it comes to vendor management from a security perspective is that we tend to request for their last like 2 IS audit. This gives us like a true north on what they can, on their maturity when it comes to the security. So if you find there are a couple of issues which had been exposed as glaring things that needs to be fixed, then we need to follow up so that we don't engage ourselves and get into a fool's paradise and the issue here hadn't been addressed. So we tend to follow up and see what has been done. And at the same time, if there's need to understand or conduct a vendor visit just to see whatever they're filled in on the minimum security baseline is actually what has been done. Like just to understand their business structure, visit the vendor, see the also the kind of the business structure, the way it's been done, and also their security perspective when it comes to implementation of the technology that they're using. The other aspect, as also as we talk about the CIA triad, we tend to have them fill the non-disclosure agreement. The non-disclosure agreement tends to protect us from the aspect where some of the data they're handling on our behalf is very critical, and it's classified. So when they fill this, we have that confidence in case of breach that we can follow up from a legal perspective. Now, there was the aspect where you talk about the pre-engagement, the service delivery during the engagement, and also the termination. Now, in terms of service delivery, in as much as we put across an SLA, we tend to put a chargeback model because here we are addressing the availability aspect. So if somebody says he'll be providing, let's say, 99 point something when it comes to the mobile, the M-Circle delivery channel. So if at all this thing goes down for like, let's say like 5 hours or 6 hours, for us, we've lost money because this channel cannot be used. So we follow up to ensure that there is a chargeback, they're held accountable, and they are charged accordingly to the, what we've articulated in the contract, so that we tend to cover our back. So our customers, even as they don't have the service at this particular moment, we tend to quantify that in terms of what they need to charge us, they need to pay us back. So that's what I needed to chime in on. Thank you.
Interesting. It's fascinating because you've really answered two questions that I wanted to ask. So I'm gonna jump those, but let me come back. Thank you, Amos. Yeah, you've mentioned this. You've mentioned documentation. You've mentioned audit and visits. Something that Robert did mention, that take your time, visit the vendor. Know their capacity, understand where where they're coming from. Yeah. So Michael, back to you. How do you deal with vendor trust? Just a quick one, and then we come to Steve.
Okay, very well. I hear you, Robert, and I've heard Amos. Robert has spoken from the bottom of his heart, and from this case, you can actually be able to see what actually clients go through. And Michael, as a vendor, you see, as a vendor sitting from.
Michael, I told you you're on the spot today, so rest up.
Yes, very well. So, Cephas, you are to be there, and I see you are doing a good job. So now, actually, this gives it an opportunity, and this actually forum brings about like you have a feel of what the client goes through, and what the client feels on the other end. You see, so as a vendor, how do you style up so that at least you can have a reduction of this kind of activities, but also going back to the circle, or not only at the circle, but also to, because I think we have a diverse audience here. Coming back to organization. So when your organization is preparing to hire or onboard a new vendor, actually, first of all, you need to work through a due diligence checklist to ensure they are fit. So that now you don't come stumbling into this kind of surprises. A vendor surprises you at the end of the day. So this is also known as a vendor assessment. So let's say the critical part that a vendor, that the circle should follow, let's say when identifying this particular vendor. So let's say you've seen that maybe Cortec is a preferred vendor, you want to work with Cortec. So number one, I think you just need to ask for references from the vendors, other clients. So you look at the clients that Cortec supports. Who are they? And how many are they? And what are they saying about Cortec? Services, the solution itself, and like what Robert was alluding to the other time, like maybe a vendor tells you that we have this feature, but when you come on the ground and after they're done with the work, that feature is not there. So you end up being surprised. So in this case, when you go to make these references and when you go to start asking these other clients, Cortec tells us that they provide this and this and this. Can you counter check with us so that you have that same functionality? And is it working for you? You see. So now that's very critical, and we need to actually the organization actually needs to look at that particular instance. Then another thing is that determine that the vendor is financially solvent, because you may need to request financial statements. Because in this case, you find that suppose maybe an upgrade is required, or suppose something goes sour and the vendor needs to come and pay back. Is the vendor financially solvent or capable in a way that he'll come and be able to readjust? Even because now you find that normally from the earlier allusion from Robert, whereby he was saying that now you had agreed that you tackle these and these and these channels, or these and these and these features. Then at the end of the day, once you are done, maybe the vendor has eaten all the money. Then now the vendor comes and tells you that now, for this item, you need to pay extra. Yet in the contract, you had already agreed that this becomes like part of the entire system. So now in that particular case, you need actually to look at the financial statements of the vendor. Is he financially solvent in a way that now will not be landing into this kind of surprises? Then you need to verify they have a liability insurance. So now, this aspect of insurance is very key. Let's say as Scotec, we went down the line, down the road on that. And at the end of the day, we not only had a liability insurance, but also an indemnity. And you know, insurance comes to cover quite a number of areas. In the event that even maybe you fall maybe into a cyber attack, how insured are you? Are you sure that you'll recover your money? Are you sure that you'll recover your losses? You see, even as an organization itself, you need also to have the same procurement of insurance services. So now, as a vendor, it's really critical, so that now you make sure that the vendor that you are onboarding as an organization, it's a vendor that you can rely upon. In case anything goes south, we know that we are covered in these and these areas, or in these and these scenarios. So I think this one, maybe I can just push it back also, because I think it's some kind of a two-way traffic, whereby also the organization does their due diligence. And then maybe if you operate in an industry with the regulatory requirements, verify also that they have the correct licensing and training, you see. And this is whereby you get to understand that maybe the people or the resources or the expertise that are coming to handle your solution, like from what Robert was alluding to, like on the aspect of, let's say, Microsoft, and maybe other providers. So this is the vendor, or does the vendor have the necessary industry regulatory requirements to handle that particular work or to handle that particular job? So that after the work is done, you don't go back and start having problems with your regulator, you see. And earlier on, I'd mentioned, as I was demystifying this particular topic of discussion, I'd mentioned about how a vendor can land into compliance issues, and also how the vendor can also land you into legal issues, you see, as far as this kind of other regulatory requirements are concerned. So it's really key for the organization to have that due diligence. And then also, the organization also has to come and conduct a background and criminal check, because you might find that from our earlier perspective as to how maybe you find that the people who used to work in this particular organization has moved to another organization. Maybe to you might think that these are very reliable resources for this particular vendor, but you don't understand under what circumstances did these people leave this organization. So even as you are engaging the vendor, get to understand who will be working on my solution and who will be working on my product that I want my organization to have. Then once you demystify that, then go as far as conducting criminal check and also background checks on these people. You see, were they involved in any criminal records? And for this case, you know, with our industry right now, the common criminal items are electronics fraud and cyber and these cyber attacks. So somebody might have been involved in a cyber attack earlier on, you see, and he has left one organization, has gone to another one. And now this is the vendor that you're procuring and having him in your organization. Something goes out, then you come later on to realize, oh, umbe, this guy was involved in this and this. Maybe the vendor didn't do that background check on this employee when he was joining the organization. But you as an organization, you should not actually leave that responsibility to the vendor alone, because now you are entering into a partnership with somebody whom you don't even understand and you don't even know. You are just beginning to know each other. And along the way, you'll get to understand more about each other. So those background checks are really necessary. And then you should also be able to assess whether the vendor will be able to meet your required service levels. And here we are talking about the SLA. So in this case, you sit down with the vendor and just have a candid discussion with the vendor that I think from my perspective, I need my service levels to be in this and this way, and to have these and these caps, and to have these and these controls, you see. And from that particular level, once you make that agreement, you should also go back and check whether they are able to meet, they are meeting the same criteria with the other clients that they are having. You see, that's why background checks not only with the employees, but also with the various clans that they are serving is really important. So that also you learn from the other clans, and then you avoid repetition of the issues that they are having, so that you don't undergo the same issues. Then
Michael,
also determine whether the vendor.
Michael,
Yes.
let me cut
Yes,
you
of course.
short there. Let me cut you short there. You've said a lot of due diligence need to be done, and I know background checks and everything. But I just want you to address this one particular question, probably the elephant in the room. You know, after all this,
Yes.
I'm getting the sense that the documentation and the verification and all that, they're very important. But at the end of the day, when the rubber meets the road, we took our grounds in a difference, Indio. I mean, and Robert had mentioned that one. You know, how does a vendor, you know, or how does a vendor deal with a client, especially from a trust issue? Because if you promised me you deliver up to Z and then you're delivering up to G, then there's a problem.
Yes, Cephas.
If you can chime in as well.
And that's yes, and that's a very big problem, and I think it's something that we hear outside here, and not only outside, but in this room, we are hearing also from Robert, because it's a really it's a big concern, and it being a big concern, that is why now after now going through those manner of checks and bringing the vendor into your room now, that now let us now start the work. Let us start the job now and start now engaging. So at the point of now engagement, and you start realizing about these gaps that are coming in, because there are normally signals and signs that normally comes earlier on, before even the real rubber meets the road. So when you start seeing these tell signs and you start seeing these suggestions coming on board, have regular sessions with your vendor, meet, tell them that I'm seeing this thing cropping up. How do you expect to handle it? How do we go about from here? How do we proceed from here? So what I'm just saying is that let the organization in the process of project implementation, don't wait until the vendor completes the project. Then ask the vendor, give me the system, I check. That will be too late. And that one now will be talking about different things. So in the process of project implementation, have project steering committee to be looking at this project as it is kicking off, number one, as the requirements are being collected and as the requirements are being implemented. Be part and partisan of the testing and roll out of this particular product. And before even the product goes to the consumers or to the customers or to the market, make sure that internally you've checked this product and make sure that it's actually accurate. And now, another thing, maybe let me jump from there. Let me now jump to where now the rubber meets the road, from where now you're trying to bring up that discussion, and where now Robert was saying that now the vendor now has gone. The vendor has gone, and the vendor has left you high and dry, you see. Now, I think also in the part of the contract, always make sure that you have a clause that safeguards you as an organization in the event that the vendor leaves, you see, so that it becomes legal. Remember earlier on I mentioned that in demystifying this particular discussion, the vendor might leave you with also legal problems, you see, not only compliance, but also legal problems. So for you to cover yourself legally, make sure that in that contract that you are signing, have that clause, have that cap, whereby if in case now the vendor leaves, maybe you have your solution or your code in an escrow account somewhere that you can go pick it and continue with another person, or maybe your data. I know later on we'll be discussing about data, but data is a very key component here. So how do you intend to handle your data? And how do you want your vendor to handle your data so that you're not left high and dry in the event that the vendor leaves? So these are very gray area that people don't normally how to go about it. Sometimes you can leave it at the hands of the vendor, but the vendor will have, will just craft an easy way out so that at least it doesn't actually go through. But if you know what needs to come out, sit with the vendor, have it outlined, and it will be incorporated, and you'll safeguard yourself.
Thank you, Michael. That was well explained. You sort of answered my point directly. That's a good one. Stephen and Samari, you wanna chime in on this?
Yeah, thank you.
and
Thank you.
everything else maybe.
The opportunity. I've had some interesting ideas, but the other panelists have also touched on some of them. But let me just jump into first onto the issue of trust. A number of times that it's expected that the bit of trust and the customer is built at some point, but ideally this is built on the onset. And I think Robert and I think also Amos mentioned something about what's the onboarding process. How do you even pre-qualify this vendor or this third party that you're bringing into your organization? What are the criteria that you're using to pre-qualify this vendor? So trust is built at that point. If you mess up at that point, of course, don't expect to have a wonderful relationship with the vendor going forward as they provide the organization with a solution or whichever service they're offering. And another important element, and I see a lot of organizations trying to focus on this, we want to work with the cheapest vendor. Cheap can be expensive. So whenever you're running for the cheapest vendor or third party, always know that there is probably some shortcuts they are taking, and that's why probably their cost might be lower. And when we speak of IT vendors more so, when you start thinking of security, people will want to associate security with a higher cost. So you may opt to go with a cheap vendor, but of course exposing your business to more threats. So it's a matter of a balance. Do you want to have a vendor who can assure us security on our systems as they work with us, or do you want to work with a vendor who will probably be cheaper, but we'll also have to consider how we factor in the security bit from our business. Secondly, trust is built, and it's a matter of relationship. I think the conversation today is more of what the vendor is not doing, what the vendor, but it's a two-way relationship. There is a bit responsibility of the vendor, and there is also the responsibility of the client. So also the client also has responsibility. If you're also not paying your vendors timely as per their contractual agreement, how do you expect this vendor also to be responding in terms of the request that you're making as a business? And it's not just in terms of making payments, it's also how you relate with this vendor. Remember, they are your partners, they're already in your house. This stranger is in your house. You need to treat them also professionally and also build that relationship so that in the near future, there could be even services that they may wish even to extend beyond of what is expected on the contract that or the SLA you signed up with the client. So trust is built both ways. It's not one way, the vendor only building trust with the client, but also the client also needs to nurture that relationship with the vendor by ensuring, as I said, paying them timely, treating them professionally and more so their staff professionally, and ensuring that both of you are working together for mutual good to ensure that both entities are successful as part of the engagement. In terms of contractual and risk management, I think Mike alluded something to that. You also want to ensure as you work with your vendors, you have also timely reviews of the entire project that you're working on. I think sometimes I've seen a number of instances where you engage a vendor, you expect them to have delivered 10 points or 10 services, but by the time they are finishing up, you're wondering how comes I'm only seeing 2 or 3 of the deliverables that you had promised, but nobody was there following up and checking in terms of the status of the project. So those would be my views, at least as of now. Thank you, but this is a very interesting conversation.
So one big part of managing a vendor and the risk that they bring is to ensure that you work with them as they service you, be there, evaluate on a continuous basis. Samari?
Thank you. This is a very interesting discussion, and these are the challenges that we face in a day-to-day discussion. To add on, there's something we call an escrow agreements. So in cases where you're dealing with vendors that have developed systems for you, it is important that you establish a form of, have an escrow agreement in place whereby the code of this application is placed under the custody of an independent party. So that in the event that the vendor is out of business for whatsoever reason, or his best developer decides to run and join another organization, you have continuity. You can be able to access this code and have another developer come on board and continue from where they had stopped. Another thing is that during the procurement process, depending on the sensitivity and the criticality of the service that you're procuring, always have a security deposit made by the vendor, such that you are safe on your part. If they don't deliver to a certain expectation, you withhold this payment. They don't have to go with it. Then, while they deliver the project, have payment thresholds in place in your contract. For example, I have seen scenarios where the UAT, the user acceptance testing, was not 100% successful. And that is expected in systems development and, and IT deployment and all that. But so if it's not 100%, why am I paying you 100%? Of course, the vendor will tell you that the remaining part is non-functional. Those are not critical technical requirements. But these are the little bottlenecks that come up to disturb you. They can't generate the report that you want to generate. You're going to again spend hours sitting down manufacturing a report that you have to take to the board, you have to take them to management every day. Yet you procure the system to do this, but they're telling you no, since it can do the transactions, it can compute the tax, but it can't give me a report. They'll say, no, they'll tell you, no, that is a non-functional requirement, you know, and they'll want to walk away with that. So have payment thresholds. For example, if the UAT is 80% successful, I will pay you this percentage. The remaining 20%, as you fix the issues, we keep rolling out the payments until we are stable. Yeah, then avoid lock-in, vendor lock-in. This is something that, who mentioned? The manager IT, Robert. Yeah, Robert mentioned. So avoid vendor lock-in. That requires transparency, that requires following procurement guidelines and acts to make sure that your vendor is not the only person in the market that can do what you want them to do. Thank you. Oh, and lastly, make sure that the vendors that you deal with or you bring on board are in compliance with your regulatory regulatory standards. For example, in Uganda, banks cannot have their data centers out of Uganda. So your primary data center should not be out of Uganda. That is a regulatory requirement from the central bank. So if you have a vendor who is offering you a core banking solution, but they only offer it on cloud, and you go ahead and procure this service, sooner or later, the central bank will come and say no. And you cannot take back the money because you did not sell the vendor. So you will have made a loss and you have to procure another one. Thank you.
So Michael, again, not Uganda laws are saying you need to be hosted locally. Anyway, let's go to the other side of this conversation today, and that is the framework. We've talked, you guys have mentioned much about doing vendor audits, due diligence, you know, assessments and all that stuff. But let's now put all these into perspective, thinking of the framework. Let me start with Robert. How do you as an IT manager in charge of risk, how do you create an effective vendor or third-party risk management framework, and how does this framework look like?
Thank you, Safas. I want to say one thing before I answer that question. Because of being beaten too many times, we as customers, people who use vendors, we have also tried to do some influencing, especially to the regulators and the government, so that we can have a way to vet vendors. We've had serial abscondees, serial, you know, vendors who are serial killers, if you call them. You know, they move from one organization to another, do the same thing, they move to another, do the same thing. Yeah. So I will talk about a group that I belong to, that is ICT for SACCOs. We have finally gotten to talk to the regulator, who is SASRA, to be able to incorporate us in, the process of vetting vendors. And this is where now that bit of trust is extremely important. If now there is a grouping of, say, SACCOs, banks, we discuss and say, oh, don't touch so and so. That vendor is a hot, ni moto ya kuotea mbali. Samara, I'm sorry, maybe you don't understand that. I will ask somebody to translate. So this should be a warning to the vendors that do your part and do it well. Again, also, like I think Steve Mambo said something. If you are a serial defaulter also as a customer, you will throw your tenders out there and nobody, I'll tell you, zero response. And you are like, are there no people who can do this work? It's because your reputation has gone beyond you, and people know Robert Isako or Chai Isako will not honor the promises of payment. So this trust thing is twofold, and we need to work on it. Now, the framework. Come to the framework. It's a lot of theory. Let me say theory. Somebody will say, as we follow ISO, I don't know ISO what, as we follow NIST, as we follow COBOT. But what are these frameworks that you want to say, this is what we follow to address vendor risk and assessment management? So really what we need to do, or I think we have not done, I'm saying, what we need to do is come with customized, homegrown frameworks that works for our environment. There are things that we get from ISO that are not for us in the Kenyan market, or for us in the SACCO sector, or for, like what the regulator, for example, says that look, your database has to be hosted locally. So you ask yourself, I'm for example a SACCO who even cannot afford to buy a good server. How do you insist that I've got to host my data locally? Why can't I do a cloud and just ensure when the data is required, I can provide? Where it is hosted, it is secure. What is, for example, the rationale of insisting that the data is hosted locally? So I don't want to just water down the importance of following a specific framework, but I'm saying let's develop local customized framework that will work for us and work for the environment that we work in.
Interesting. That is a good point, and I've also realized that how I asked the question was from a perspective of creating, not necessarily adopting probably a certain framework. And Samari and Steve and anyone else. Oh yes, Michael, you can chime in on this one as well. I know there's the element of existing standard frameworks. Let's say the ISOs and the COBITs and everything. There's an element where they overlap. They somehow you have to integrate several elements to create something customizable for you for your organization. Samari, Steve, Michael.
Yeah. So thank you, Cephas. Now maybe let me just talk about developing an effective framework, because other frameworks may not work for you, and maybe even the adopted framework may not work for you. But what I just say directly to the point is that when designing a third-party risk management program, I think it is proposed to divide the process into two distinct stages. So there's the initial setup of the framework, and also there is the ongoing monitoring of that particular program and of that framework, because you'll be monitoring its implementation along the way, because it's never a one-off thing; it's an ongoing process. So on the initial setup, I think you need to identify the risks created by your organization by the use of third parties. You see, so this process should involve actually identifying the scope of your risk management framework, including the risks that you should be monitoring and the types of third parties you should be assessing. So these third parties are your vendors. And earlier on, I'd said that you not only look at the vendors that provide you the core banking and those other banking systems, even the landscaper, anybody who supplies you with anything, or any contractor that comes into organization to offer you services, that one is a vendor. And so it should be incorporated into this particular program. And when developing this framework, they should be there. Then also, you should be defining your policies and procedures for monitoring the third parties. So when developing this framework, make sure that you define your policies. And the first step with any framework is likely to be an updated definition of your policies. So these policies should include roles and responsibilities of each person. Now, the roles and responsibilities of the vendor whom you are bringing in, or any third party that you are working with. And also the roles and responsibility of the organization. Where does this jurisdiction lies? Up to where should the vendor come into place? And up to where should the organization go into this particular engagement? Then also you need to have the risk assessment process. So the risk assessment process, this is an ongoing process. You don't actually just ascertain the risk right now, then you say that this might be the risk, and then you say that you are covered. No, it is a continual process. So you have to define the risk assessment processes. Then also due diligence in selecting a third party. That one I'd also mentioned about also the ongoing monitoring, third party onboarding and termination, and oversight escalation. These ones should be part of this particular framework. As you're developing it, you need to have these ones into consideration. Then also consolidating your existing third-party profile data and contracts into a single repository, so that after you've done your due diligence, after you've acquired information about your third party or your vendor, so take that data that you've and those questionnaires that you used to share with the other clients that they serve, whatever they are feeling there, or whatever milestone that you achieved with the data, put it somewhere. Take also the contract that you've signed with this particular vendor, put it also into one particular repository, put them together. Because one of the principal challenges initiating the process is normally more effectively that you manage your third parties in the probable dispersion of this data that we're talking about right now here with Robert. And so now so for this one to become effective, so I mean, they just need to be assembled together. Now, another thing that we need to look at is that, like you see, let's say when developing this particular framework, we look at the critical gaps or missing data. So there are those gray areas, you see, because now we were talking about these surprises that normally comes on board, because now it is highly probable that you will have or not have all the data that you need from the internal sources. I mean, for you to conduct the risk assessment of the third parties. So you will also need to be sure that your platform is capable of gathering data from multiple, both internal and external sources. Internal meaning that, like the way the SACCO management comes in to say that let us go and do due diligence on this particular vendor. And also, like now what Robert is saying, that now they formed a group called ICT for SACCOs. So in this group also, this one is an external source of collecting data, because it contains several people who are dealing with the same vendor, or maybe other vendors for that particular matter. So that becomes another source of data collection. Now, it might also come from other organizations, or in this case, we also now need to look at conducting the initial risk assessment in the initial setup. Now, the framework that you are looking at in terms of building it, you see, in building this particular framework, we also have to have a caption for monitoring this vendor, because both the vendor and the framework itself, because once the framework has been set up, the challenge is now to operate the ongoing monitoring of your vendors. So these activities include the ongoing due diligence, because you might have done the initial, it is like going for this, what we call the, this one for the CID, the certificate of good conduct. The moment you go for the good conduct, you will be cleared at that time. But after you leave the CID headquarters, and maybe on your way, you go then, you slap somebody along the way, and then maybe you go to commit a crime, and then you are booked, you see, and then maybe you appear in court, you go for 2 weeks in jail, and then, but you've already submitted your certificate of good conduct to your employer, and you are now employed, you see. So now, with the vendors, let's not also approach it in that way. That now we've done our background checks, we've done our due diligence on this vendor, and is now clean. So the framework must also include the ongoing monitoring of this particular vendor. So that needs to come out clearly in that framework, because now it does also.
Yes, go ahead.
Yes. So this part of the process requires actually deep dives into areas such as IT security, financial stability, even aspects of maybe compliance and all that. So this is always accomplished through multiple activities, including the use of in-depth questionnaires, so that you share with other people in a continual basis. Also, screening of third parties against, because there are normally also this kind of third-party tools that you can use, because you know some people normally hide in the internet, but by use of these third-party tools, you're able now to get their views. So again, another thing is the onboarding and termination of third parties. This also should be included in this particular framework. So how do you onboard and how do you terminate your vendors? So onboarding of a new vendor is normally a key process for an organization, and implementing procedures to ensure that the correct vendor are onboarded. It's normally very critical, you see, and it is an important part of your vendor risk management program, because it needs to be implemented consistently across the organization. And this consistency is normally key to the long-term evolution of your program. Otherwise, your framework will just be, will not actually matriculate very well. And also the termination of the relationship with the vendor also is very important, and is often a focus for regulators, you see, because for the case of where now Robert alluded to SASCRA, how they engage SASCRA, because also now, whenever a vendor has been terminated, it also has to be clear from a regulatory perspective. Did this vendor overlook some certain areas of regulation or compliance? So because there are business processes also focused on the addition of a new vendor, but the process on termination is often received normally less attention, because you find that normally sometimes some organizations, whenever they want to part ways with the vendor, maybe they just close the system, they move on to another vendor. They don't even inform the vendor that we've terminated services with you. You see, they just take it under the rugs and they move on very swiftly and very comfortably. It's normally very much risky and very much chaotic sometimes, because you might need to fall back to this particular vendor in one way or the other, and it might put you into very murky situation. So that also organizations also have the process also to identify when this vendor should be terminated, and to ensure completion of the procedures associated with the termination of this relationship. And again, just ensure consistency, because this process also should be automated across the organizations. It should not just be like a one-man's show, that today Robert has woken up and feels like now this vendor has to go. It should be like a process and an engaging process, that so that now we can be able to part ways in a proper manner. So this is why I'm speaking as a vendor. Robert was speaking as a client. Here now I'm speaking as a vendor.
Yeah.
Then also,
yeah.
Let me cut. Yeah. Then also in the framework.
Mm.
Yes.
Just finish.
Yes. Then also in the framework, in the framework also must have oversight, reporting and analytics, because once your vendor risk management framework that we're talking about is up and running, so you've now executed it. So an oversight of the framework and the ability to conduct analytics of the framework is very important, because an automated solution should actually enable the organization to quickly see the risk classifications with their vendor and the risk assessment of the risk activities that are upcoming and the ones that are actually due, and even alerts that have been generated also will also come into place. Then also the framework must have also what we call contract management, because in the contract management is normally a very gray area, and sometimes some organizations look at the contract as just a document, things put into place, and then we've signed a contract. You just go comfortably say that we've signed a contract, but you have not incorporated yourself into the actual contract management policy as is required. So now you have an efficient vendor risk management process in place. It's going on great. But what about the contract? At the end of the day, the contract is the document everyone will revert to. And if there's an issue, as it contains all the important details of the relationship also will also be defined also in the terms of engagement. And also we must also recognize that they are especially important at the end of the relationship, because when you are parting ways with the vendor, you are terminating the contract. So it becomes a very important document at the end of the relationship when the two parties need to part ways. So in terms of technology, let's say like in our case right now, contract management is not all that complicated, because the critical functionality begins with ensuring that you have the contracts stored centrally with the key data elements. In a technical term, we call it metadata. So identify per contract. So you find that an example of important data element is that the effective date when the contract was effected, the term of the contract, the jurisdiction of both the vendor and the organization itself, cancellation periods, when the contract can be cancelled, then auto-renewal clauses, because sometimes the contract might reach the end of its defined time framework and it might need to be renewed. So how is the auto-renewal clauses into place? And then also the indemnity, because you have to be indemnified in this particular case. And then also confidentiality clauses, because you might find that now, in the case of a vendor having your data, you might be surprised that your data also, you see it somewhere else. So these confidentiality clauses must also be in place. And then also, you're getting into a partnership with somebody else, a stranger for this matter, and you're building trust and rapport with one another, so that in the case of termination, your confidentiality still remains. You don't start going outside there, then start talking ill about the vendor or the organization or the client for that matter, and also exposing the internal things between the two of you. So the key attributes of each contract needs to be, yes?
I was just saying,
monitored.
Yeah,
yes.
It's great you've emphasized on the confidentiality and brought in the technology aspect. But I'd like to cut you short there and probably private the conversation to Samari and Steve and Richard as we wrap this whole session up. We don't want to stay here too much. Samari, you can respond probably to the earlier question I'd asked about risk framework and any thoughts you have around that. But could you also speak specifically to the issue of bringing together multiple frameworks into one. And again, this probably is based on the organization needs or the regulatory needs and all that stuff. Can you just give us your thoughts around that and probably share practical examples of how different frameworks can come together?
Thank you so much. It's a very good in-depth discussion. Without reinventing what Michael has been talking about, there's no one size fits it all, and you cannot have a standalone. You cannot use one standard framework. So most of the times, what we will have to do as enterprises is to borrow from the different frameworks and intermarry 2 or 3 of them in order to fit our organizations. And overall, we must ensure that these frameworks cover our how do I say this? They cover our span of processes. They should cover people, it should cover technology, and it should cover the processes that we have. So it is important to run through the entire life cycle of your vendor relationship, from the time before you bring this vendor on board, during their time, their tenure with you, and also while they are leaving. And amidst all this, always make sure that you are complying to the local laws and regulations of your country before you can consider others. Because sometimes you find yourself in situations where we have GDPR, and we may have institutions that are based here locally, but they process data that belongs to the Europeans. And it's very important that you find a way of complying for your part. Yeah, thank you.
And that's a good one. Robert, you're the guy who told us about how you deal with with third-party risks. So I'm addressing to you straight up this question that there's an element of intelligence when it comes to sort of the new school way of managing risk and probably vendor risk. Do you have any thoughts around how you can enable a very intelligent way of managing third-party risk?
Thank you, Cephas. It is actually not a step-by-step way. It is, when you deal with vendors, one vendor you've got a different way to deal with him or her, or that company, or a particular type of vendor has their own. So in my experience with the vendors, one, I've realized vendors are people just like the customers are. So number one, they need to be treated as such. Once you deal with them as look at them also that, look, we need to be paid so that we can provide the service we want to provide. We need you to address us properly so that we can work in good harmony and trust. So it is engaging everything in terms of socially deal with them with respect, deal with them professionally, deal with them, Don't also leave things, how do I say? Somebody talked about documentation. Don't again say we are working as friends, a gentleman's agreement. No, it doesn't come to that. That is the mistake most people do, and they don't sign contracts. They don't sign requirements, so that they leave room for disputes that are not supposed to be. Even when you do payments, to document those things. Then engage every person in your organization. The finance team have their role, the operations people and the users have their role, the board has their role. once everybody in the ecosystem is engaged, then you probably will end up having, for lack of a good word, a watertight arrangement with the vendors.
Fantastic. And last one to you, Steve, and you can respond to probably some of the earlier sentiments. Let me bring in the issue of cyber resilience. I know vendor and third-party risk management is a big part of, or a big pillar in the cyber resilience cycle. How does it fit in? How can VRM help organizations to be to mature their cyber resilience?
I think that's a very good question, and I had some other earlier sentiments, but let me just start off with what you asked. Remember, as part of every other organization's cybersecurity posture is not just based on the organization itself, but based on the third parties or the organizations you're calling vendors as part of this conversation. So your security is not just your own security within the business, but it is also dependent on the vendors that are providing services to the organization. And we've seen scenarios where a vendor is compromised and that incident ends up impacting the client negatively. So, and this starts off from what we've been discussing today in terms of when you're onboarding this vendor, do you also check out their security? I mean, do you ask them whether they are doing, I think Amos had alluded to this, what kind of cyber controls have they put in place within their business as they also offer you the service or solution that they are bringing on board to your organization. Now, there's an assumption that when we talk about a vendor and more so when we start thinking about cybersecurity, we are thinking only of IT vendors. But think of it this way. Organizations do engage legal, do engage accountants who have information about the business. They also need to know what kind of security defense controls they are putting in place to protect the organization's data and any other information they might be having about the organization. Now, that brings me to something very important I wanted to address earlier in terms of who do we define as a vendor? Does the one-time vendor who come in to offer, using Mike's example, landscaping, do we consider them as our vendors? What about the freelancer who's also working on our website? Do we also consider them as a vendor? Of course, they are providing a service to the business. So the same controls that we are saying that if you are Kotek coming in to provide a core banking system, these are the criteria we expect of Kotek as is coming on board to provide the service. Same case to this other organization that is providing maybe cleaning services. Are we also doing, are we asking this vendor who's providing cleaning services whether they have liability insurance like Mike had alluded? Because we know very well that cleaner could be used by a hacker to introduce a device into the organization or plug in a USB into the credit officer's laptop or desktop. So we also need to know the risk from that point. In addition to that, and this is in terms now onto the frameworks, and I think it has been discussed in details. I think what frameworks do for us is that whether it's ISO 27001, NIST, or whichever, they give us that a baseline so that we don't have to reinvent the wheel again. So the good thing about the framework, somebody has done it, it's been tried, tested out there. So for us, what we need to address is look at the scope. What does this frame, or rather what out of this framework, what is very relevant to my business that we can apply? And as part of implementation of, and I'll say, for example, ISO 27001, the first step actually is understanding the scope of the business in relation to the framework. So once you understand the scope, it's very easy now to start borrowing, what the framework is proposing vis-a-vis what is within your organization. Of course, as I've said, not everything will be applicable, but the framework gives you that shell or that structural shell for you to be able to start implementing the framework within your business. The advantages, it's been tried, tested before. So for you, you're working with something that I'll say that is resilient in the sense of it's been tested, tried severally, and it's an internationally recognized standard. standard. So you don't have to reinvent the wheel again. Thank you. I think those will be my sentiments for now.
Yeah, fantastic. So just two questions, then we can wrap this up. Somebody, if you can still hear me, there's someone who had asked, directed a question to you earlier. Let me try and find it. By David. Samari, can you hear me? Okay. Let me.
Yes, I can hear you. I can hear you.
Had you had a chance to look at the question?
Not yet.
Okay. So someone is
Read
asking
it.
here that would Samari highlight vendor risk vis-a-vis 5G implementation in Uganda? That's very interesting.
That is very interesting. I really haven't had the exposure to interact with companies that are adopting this technology, but like any other technologies that have evolved over time, starting with the internet itself, starting with the computer that we use, starting with the hard drive that you use, it all migrated from a certain place to Uganda where we are now. And at the end of it all, the principles are the same. The principles that apply to a vendor, whether it's an internet service provider, whether it is a server, whether it is an external hard drive, at the end of the day, the principles that govern it are going to be the same. If there are any other risks that are tagged around 5G, like health related and all that, I don't have any assurance that these are real and these are true, and therefore we should think of ways of mitigating them. But I think it's a technology that has come, and as it evolves, we'll be alert to handle it and to deal with it. Thanks.
Fantastic. Back to the principle. All right. The same jogger is saying that cybersecurity risks impact the social economic posture of a country. Vendor risks, if not well managed, can highly impact the cybersecurity posture of a nation. It's therefore imperative that VRM frameworks be embedded in the nation's legal and regulatory system. I think that is interesting, but David, you're taking the stakes higher to the national level here, and I think this reminds me of a webinar we were having before, and we were discussing the geopolitics of cybersecurity. You know, how we're using Chinese products, how the U.S. and China, they're fighting over, pushing technology to Africa, and how there's some sort of technology land grabbing that is happening among the powerful nations. Thank you for that. I think that's a fascinating conversation. I mean, if there's anyone who wants to talk about that, please go ahead. Let me see if there's something else here. Yeah, so is cyber insurance a product what's taking up now that you mentioned third-party risks? I'm sure Robert and Michael have insurance from Yelbridges. I don't know, I'm just saying. But again, if you want to speak about cyber insurance, feel free to do that in a minute. All right.
Yeah.
Yes.
Sorry. Allow me to agree with who was that? David.
David, yes.
That cybersecurity risks have got to have they've got to resonate with the laws of the country for the risk to be properly mitigated. Because you see, somebody commits cybercrime, and the laws of the country don't, have corresponding reaction. Even in terms of penalty, even in terms of procedure. So you'll find somebody has committed a crime worth millions and millions or billions of shillings. Then they go and they get 1 month jail. What is the crime? The crime is not even legally defined. So I agree with David that we really need to get the country to look at this issue so that crimes like that can be addressed legally properly. Now, going to insurance, like I told you, I've had a few years working as an insurer. And I'll tell you for free that without a doubt, insurance is a must for you to mitigate any cybersecurity risk. Why? I'll tell you, for example, do you know even when a simple thing like your phone cracks, and if you had insured it for, I'll tell you, maximum is 1,000 shillings per year, you'll go get a new phone. You know, if my house where I am catches fire, you know, the insurance will pay, you know, for a new house, you know, the value of the house, and even pay including my socks. That if I did a proper insurance about it, I could even insure as you know, my cheapest clothing will be probably my socks. You know, it will pay for me for that. So the same way the insurance does those things that I'm talking about, the same way it will pay for loss of money. If you can quantify reputation, it will pay. But the important bit here is you've got to do some mitigations on your end. That includes having a framework in place, having you know, having all the security gaps addressed, so that your premium is not beyond this world. If you have put all those things in place, your premium will be so little, because they know by the time successfully a cybercrime has been committed, it was way beyond, and the insurance is ready to financially compensate you.
Very well.
Thank you, Robert. Yes, Steve.
Just to add on what Robert had said, it needs to be very clear that cyber insurance is not a replacement of cybersecurity. So those defense have to be put in place. Cyber insurance is coming in to address that residual risk that despite you investing as a business in a monitoring system or a firewall or whatever security solutions you've put in place, there's the bit that there's that residual risk that is left that no technology, no human can be able to address. That's the bit what that insurance is coming in to address. But also, as an organization, you need also to be attractive to the insurance company. So the insurance, remember, they're also in business. They also don't want to take up a bad risk. So how do you prepare yourself to be a good risk or a good risk, so that even the underwriters or the insurance companies are more than willing to offer you that or the service. So this comes back to the issues that we are talking about, that you put in your defense controls in place. Basically, your cyber hygiene is healthy before you even engage this insurance company. Because at the end of the day, you also don't want to pay too much in terms of premium. And also, the insurer is also looking at it this way. We do not want also to issue you a cover, then the next morning you're also already raising claims, which is also a loss for the business. So again, it's both ways. You need to clean up your house before you go out there and source for insurance. And at the end of the day, it doesn't mean just because you have a cover, now you sit back and sleep. Your continuous monitoring of your system and improvement of your security posture has to keep on continuing. But very interesting.
Very interesting, yeah. And the last word from David. You can hear me.
Yeah, I can hear you very well. Thank you very much. I've really enjoyed this presentation. For my roadside parking, I really wanted to catch up with it.
You're welcome.
Now, yeah, I wanted just to make just one comment that given our scenario, especially in Africa, where we rely so much on outsourcing vendors, actually even offshoring, there's one area in vendor risk management that we tend to really not concentrate on. I think most of the discussion has focused on processes, you know, for vendor engagement and so on and so forth, and also the vendor himself or herself. That's the subject. But again, there's requirement for a deep focus into the products and the services that the vendor is actually delivering to you or to us as an organization. And I think a lot of challenges have come up in terms of users or customers not taking, I would say, risk assessment of the products or the services that the vendors delivered. For example, I think it's common that we do not do basic vulnerability assessment of 99.99% of the electronic hardware that we import from offshore. And again, we've seen cases, in the AU headquarters in Addis Ababa, sometime they were talking about, some malware that was really doing a lot of snooping on, the AU meetings and so on and so forth. So I think that's an area that I just wanted to emphasize on. Then again, to achieve cyber resilience, in regards to adopting of frameworks. Framework showbiz, for my experience. But again, I think from what Samari talked about, that you really need to customize a framework that really works for you, so that you take note of the nitty-gritties that would ensure your cyber hygiene. That's my 2 cents. Thank you very much for the opportunity.
Yeah, thank you, David. And I think Lisa should welcome you in a future session as well to be a panel, if that's okay.
Yeah, thank you very much.
Yeah, you're welcome. So I guess David sort of wraps for us this session today. Thank you, gentlemen and lady. But just one last thing, and this is a good one for our audience. Let me see. Yes. So we're going to do a very quick raffle for all the 40 guys who are around here, and particularly those guys who come from the circles. So a quick raffle. Please send me a private message in the chat section with any number between 20 and 90. Send me a private message in the chat section with any number between 20 and 90. And the 10th person to respond will receive a free cyber risk quantification for the organization. If you're interested in that, please send any number between 20 to 90 privately to me. And the 10th person to answer will receive a free cyber risk quantification for their organization by Yale Bridges Limited. All right, let's get those numbers coming in. In the meantime, I want to thank you. Oh, I see. All right. Thank you, Robert. I've seen your number. So yeah, thank you, Robert. Thank you, Michael. Thank you, David. Thank you, Samari. Thank you, Steve, for coming in, for sharing your rich insights and experiences. It's always a pleasure to be hosting you. And as I always say, I have 2 pages of content or notes I have taken. Maybe I can use them in a later webinar. Thanks to our audience for sitting with us for the last 2 hours. Webinars are typically meant to be 1 hour, but we try to stretch it so that you allow our guests to be able to share their mind and their experiences substantially. Yeah, so and I guess here on I will just be looking at the numbers, and then I will invite Michael to give a parting shot. I think you've been quiet for a while, and then Lisa, you can step in. Thank you very much.
Thank you, Cephas. Maybe my parting shot would be on an area where we try to touch around it. I think Robert tried to talk about it on the issue of data. Samari also tried to talk about it. So there are some little divergent views there. But I think what we should look at, even as much as we are going for these particular systems, and even as we go for this offshore system or off-the-shelf kind of systems, when it comes to financial system that contains financial data, according to the legislation, these particular systems and their data must be hosted in the host country or in the host nation that that it is required, whether it's on cloud or private cloud or whichever kind of cloud it must be in that particular country. So now you find that this provides a very key component, because after a long wait, Kenya passed the comprehensive data protection legislation, the Data Act, that was in 2019, last year actually, by the president. And so that act brought about into play comprehensive laws that protect personal information of individuals and establishes the Office of Data Protection Commissioner, and also makes provision for the regulation of the processing of personal data, providing for the rights of the data subjects and obligations. So now that's why you find that as Cortec, we've gone to like in Botswana, and you find that in Botswana, we have a private cloud within Botswana because of the regulation of the governing body of the Reserve Bank of Uganda. So we have actually to make sure that it resides there. Also in Swaziland, and also we are in Uganda, Samara, and Uganda also the same regulation also applies. So Robert, you're trying to maybe just to add to whatever you are trying to come up with, so that data, depending on the regulation, not also on the ISO and those other compliance laws, rules. This one now is an act. This one is an act that has been ascended to. So that means that data must reside within the local country. And that's why maybe this will come as another discussion altogether on actual data protection, so that now you can be able to safeguard your data, so that now, even as you're engaging your vendors, engage your vendors by finding out whether they are cognizant of this data protection law, so that you can be able to safeguard your customers' information, your customer data, and your financial information. Over to you, Cephas.
All right, Lisa, close for us this session. All right, Lisa is MIA. Okay, so okay, there you go.
I'm back. Thank you. So round up the session, we'll be getting in touch with the SACCOs that have won the award for the cyber insurance, cyber risk quantification. So be on the lookout just after we conclude this session. I'd like to give a vote of thanks to the panelists, most especially Michael, Robert, Samari, Steve as well. This has really been a great session, especially because we've really been able to broaden the discussion and really demystify what areas of concern that we really wanted to focus on. So thank you very much for your time. As well as David and Amos, who were able to also give in their insights. Hopefully we'll get to have your panel in the next webinar sessions. So these are sessions that we do every Friday, starting 11 a.m. So would you want to also take up a panel role? Please get in touch with Yale Bridges. So you can get in touch with us at office@yalebridges.com, or write to us on LinkedIn, and we shall be able to comment on that. Otherwise, regards also to the participants. Thank you for taking time to also be a part of this session. And hopefully we'll look forward to a great interactive webinar in the next ones to come. So thank you.
Bye, everyone.